Welcome to our deep dive into,
This is a good dive.
well, this really fascinating intersection of finance and politics and
Okay.
even a little bit of entertainment.
Yeah.
We are just days after the U.S. elections.
Right.
And the markets are buzzing.
They are.
You know, trying to figure out what a new administration and the latest economic data and all these company earnings really mean for the future. We've got some great intel from this financial news show broadcast live from the New York Stock Exchange floor.
Oh, wow.
And they're covering it all from gold prices to Disney's streaming success.
It's an exciting time to watch the markets right now.
Yeah.
Because,
I bet.
we're seeing these political decisions play out in real time. And it really impacts investor confidence.
Yeah. Well, let's jump right in.
Okay.
The latest news, of course, is that we have a new U.S. president.
We do.
And they're not wasting any time filling those cabinet positions.
Yep.
What are some of the picks that stand out to you?
Well, the sheer speed of the appointments is remarkable.
Yeah.
And yes, some of these choices are pretty unconventional, even raising a few eyebrows. Elon Musk
Right.
heading up government efficiency efforts, that's certainly a bold move.
That's a big one.
It is.
Yeah.
And 44-year-old former Fox News personality as the new Secretary of Defense.
Wow.
You can't say this administration is playing it safe.
It's definitely shaking things up, but
It is.
the appointment that seems to be generating the most buzz is Matt Gaetz as Attorney General.
Yeah,
That's a controversial choice, to say the least.
it is.
Or-
Gaetz is a polarizing figure, known for his outspoken views and confrontational style.
Sure.
And of course, there were those pending ethics investigations surrounding him in Congress.
Right.
His appointment has sparked intense debate about the new president's priorities and judgment.
Yeah, and the timing of his resignation from Congress, right on the heels of his appointment, and just as the House Ethics Committee was about to release its report on him,
Right.
that's raising a lot of suspicion.
Oh, yeah.
Don't you think it feel a bit too convenient to be a coincidence?
It's certainly a strategic move.
Yeah.
Some see it as a calculated attempt to evade scrutiny and potentially shield him from further investigation.
Right.
Whether it will ultimately benefit the Republicans is another question.
Yeah.
This whole situation has the potential to backfire spectacularly.
Totally.
It's a political drama unfolding in real time,
Uh-huh.
and the stakes are high.
Okay, so we've got Musk and this V. Ramaswamy character tasked with making the government more efficient.
Right.
I'm curious, is that even realistic? The U.S. budget is massive. It's hard to imagine making a real dent in that.
It's certainly been attempted before.
Yeah.
And the U.S. budget is a notoriously complex beast.
Right.
If you look at this breakdown from our source, you'll see that the vast majority of spending is locked into what's called non-discretionary spending.
Okay.
Things like interest on the national debt, Social Security, and healthcare.
Right.
That leaves very little wiggle room for cuts.
So basically, they're walking into a situation where a huge chunk of the budget is essentially untouchable.
Pretty much.
What options do they have to increase revenue? I imagine raising taxes would be a tough sell for this administration.
It would be a politically risky move, for sure.
Yeah.
Some experts suggest raising corporate taxes might be the least painful option.
Uh-huh.
But that's unlikely to be popular with the new president's base.
Yeah.
There's been talk about reducing waste,
Okay.
but it's hard to say how much they can realistically save when you're dealing with a multi-trillion-dollar budget.
Even if they could find a way to trim just a tiny percentage, it would still amount to billions, right?
Oh, absolutely.
But finding and eliminating waste in such a massive system, it sounds like searching for a needle in a haystack.
It's a Herculean task.
Yeah.
We'll have to see if Musk and Ramaswamy can pull it off.
Well, while they're trying to streamline the government, the markets are reacting to all this political upheaval in
Right.
some interesting ways. Gold, for example, has taken a pretty big hit since the election.
It has. Our source put it pretty dramatically. Gold is down 8.2%, the worst drawdown of the entire rally. And this chart doesn't look really too healthy.
Oh, wow.
A drawdown, by the way.
Okay.
It's just a fancy way of saying a peak-to-trough decline
Okay.
during a specific period.
Got it.
It's a measure of how much an asset's price has fallen from its recent high.
Okay, thanks for clarifying that.
You got it.
So what's behind this gold slump? Is it just investors taking profits after its recent run-up? Or is there something more going on?
It's likely a combination of factors.
Okay.
Profit-taking is certainly part of it, but there's also a potential shift in investor sentiment.
Okay.
Some investors may be rotating out of safe haven assets like gold and into riskier assets that they believe will benefit from the new administration's policies.
So while gold is taking a breather,
Right.
it sounds like other assets are ready to party.
That's right. The stock market,
Yeah.
especially the Russell 2000, which tracks small cap companies,
Okay.
has performed well since the election.
Mm-hmm.
And Bitcoin is up over 100% year to date.
Wow.
It seems like the cryptocurrency market is on a tear.
Bitcoin never fails to surprise.
It doesn't.
Let's move on to a company that's making waves in a different arena.
Okay.
The streaming wars.
Yeah.
Disney is reporting strong earnings, largely driven by the success of its streaming platform.
It is. It is a bright spot in an otherwise uncertain market.
That's true.
Streaming has been a tough business for many companies. Just look at what happened to Netflix last year.
Right. Everyone and their grandmother seems to be launching a streaming service these days.
It seems that way.
What is it about Disney's strategy that's working so well? Even my family is hooked on Hulu, and let me tell you, those scarcity commercials are burned into my brain.
Oh, I hear ya.
So,
Their success seems to stem from a few key factors. First, they're leveraging a vast library of beloved content.
makes sense.
They've got the Disney classics, Marvel, Star Wars.
Right.
It's a powerful combination that resonates with audiences of all ages.
Of course.
And of course, bundling Disney Plus, Hulu, and ESPN Plus together provides a compelling value proposition.
It makes sense, especially for families.
Yeah.
But not everything is rosy in the market.
True.
Copper, for example, is down significantly.
It is.
What's the story there? Is that somehow connected to the rise of streaming?
Not directly. Copper is down, but it's more a reflection of global economic concerns than anything happening in the entertainment industry.
Okay.
It's often seen as a barometer of global economic health because it's used in so many industries. Construction, manufacturing, electronics.
I see.
And its decline is largely attributed to concerns about a slowdown in China's economy.
So China's economic health is tied to copper prices.
It is.
How so?
China is the world's largest consumer of copper.
Oh, wow.
So any sign of weakness in their economy has a ripple effect on demand.
Right.
And consequently, the price of copper.
I see.
There are also concerns about potential trade tensions, which could further dampen demand. It's a situation worth watching closely.
Okay, so we've got this complex interplay of politics and economic data and market reactions.
Right.
And then, of course, there's the Fed.
Of course.
I feel like they're always lurking in the background.
There are.
Ready to pull the levers and adjust interest rates, which impacts everything.
The Fed is indeed a major player in this story.
Yeah.
Their decisions on interest rates have a ripple effect across the entire economy,
Right.
influencing everything from borrowing costs to investment decisions to consumer spending. And based on recent speeches from Fed officials,
Okay.
they're signaling a cautious approach.
Okay, they keep mentioning this neutral rate.
Yeah.
Can you break that down for me? I'm not sure I fully understand what they're aiming for.
Sure. Think of the neutral rate as a sort of Goldilocks interest rate.
Okay.
Not too high to stifle economic growth, but not too low to fuel inflation.
Got it.
It's the theoretical rate that neither stimulates nor restrains the economy. The Fed is constantly trying to find this sweet spot,
Yeah,
but it's a moving target.
I bet.
And with all the uncertainty in the current economic climate,
Right.
it's especially challenging.
It sounds like 2025 is going to be a particularly tricky year for the Fed to navigate.
It will be.
Um,
Their actions will depend heavily on how the economy performs in the coming months.
Right.
And there's no guarantee of a smooth landing.
Yeah.
They'll need to carefully balance the risks of inflation and recession. It's a delicate balancing act, to say the least.
And it sounds like they're proceeding with caution.
They are.
What are some of the key takeaways from the recent Fed speeches? What should we be paying attention to?
The common thread running through these speeches is a concern about inflation and a need to watch the economic data closely before making any further rate cuts.
Okay.
There seems to be a consensus
Okay.
that they need to be patient and let the effects of their previous rate hikes work their way through the system before taking any drastic action.
So a wait-and-see approach for now.
For now.
Makes sense. But I have to wonder what happens if inflation doesn't cool down as they're hoping. Are we looking at potential rate hikes on the horizon?
It's certainly a possibility.
Okay.
The Fed has made it clear that they're willing to do whatever it takes to bring inflation back down to their target level.
Right.
If that means raising rates,
Yeah.
even if it risks slowing down the economy,
Right.
they've signaled they're prepared to do so.
So potentially more turbulence ahead. It sounds like we're in for a bit of a roller coaster ride.
The economic landscape is rarely smooth sailing.
That's for sure.
Buckle up because 2025 might be a bumpy ride.
Well, I'm ready for the adventure.
Good.
Speaking of adventures, let's shift gears and talk about Disney again.
Okay.
They're clearly having success with their streaming strategy.
They are.
But what about the other players in this space? How are they responding to the Disney Plus juggernaut?
It's a fierce battle for subscribers.
Yeah.
And Disney's deep pockets and a vast content library give them a significant advantage.
I bet it.
But the competition is innovating as well.
Okay.
We're seeing streaming services offering more niche content, partnering with other companies, and experimenting with new pricing models to try to stand out from the crowd.
It's fascinating to see how this whole streaming landscape is evolving.
It is.
Speaking of evolving, let's circle back to copper for a moment.
Okay.
We talked about China's economic slowdown impacting copper prices.
Right.
But are there any other factors at play here? What else should we be watching for?
There are a couple of other things to keep an eye on.
Okay.
First, there's the global push for renewable energy.
Okay.
Solar panels, wind turbines, electric vehicles. They all require significant amounts of copper.
Right.
So as the demand for these technologies grows,
Yeah.
it could put upward pressure on copper prices.
So a potential tug of war between economic slowdown and the green energy boom.
Exactly.
Okay.
And the outcome of this tug of war will have significant implications for copper prices in the years to come.
Okay.
Another factor to consider is the supply side of the equation.
Okay.
Copper mining is a complex and expensive process.
Yeah.
And there are concerns about potential supply disruptions due to political instability, environmental regulations, or labor strikes.
So we've got demand uncertainty and potential supply constraints.
We do.
It sounds like copper prices could be in for a wild ride.
It's certainly a volatile market,
Yeah.
but that volatility also presents opportunities for savvy investors who can anticipate market trends and make informed decisions.
Okay, I have to ask, what's your take on all this? Where do you think things are headed? Are you feeling optimistic or pessimistic about the economic outlook?
That's the million-dollar question, isn't it?
It is.
Honestly, it's hard to say for sure. There are a lot of variables at play.
Sure.
But one thing I've learned from watching the markets is that they're constantly evolving, constantly adapting. Even in times of uncertainty, there are always opportunities to be found.
So what's your advice for someone like me trying to make sense of all this and make smart financial decisions? What should I be paying attention to?
The most important thing is to stay informed.
Okay.
Read, listen, learn, pay attention to the news, but also dig deeper. Seek out diverse perspectives.
Okay.
And remember, no one has a crystal ball.
Right.
Don't try to time the market. Focus on your long-term goals and make decisions that align with your risk tolerance and financial plan.
That sounds like sound advice. Stay informed, be patient,
Yep.
and don't panic. Got it. But let's talk a bit more about those potential risks we've been discussing.
Okay.
Inflation is obviously a big one.
It is.
What are some of the specific ways that inflation can impact my investments and my overall financial well-being?
Inflation erodes the purchasing power of your money. That means that the same amount of money buys fewer goods and services over time.
Right.
This could be especially problematic for fixed income investments,
Okay.
like bonds, where the interest payments you receive may not keep pace with inflation. Inflation can also lead to higher interest rates,
Yeah.
which can make borrowing more expensive and potentially slow down economic growth.
So it's a double whammy.
It can be.
Eroding the value of my savings and potentially making it more difficult to invest and grow my wealth. What are some strategies for mitigating the impact of inflation? How can I protect my portfolio?
Diversification is key.
Okay.
Don't put all your eggs in one basket.
Got it.
Spread your investments across different asset classes, industries, and geographic regions.
Okay.
Historically, certain assets like real estate, commodities, and equities have tended to perform relatively well during periods of inflation. It's also important to consider investing in assets that can potentially outpace inflation,
Okay.
such as growth stocks or businesses with pricing power.
That makes sense. So spread the risk, consider inflation-resistant assets, and don't panic. But what about the elephant in the room, the Fed? How do their actions impact inflation, and what should I be watching for in terms of their future moves?
The Fed's primary mandate is to maintain price stability. That means keeping inflation in check.
Right.
They have a number of tools at their disposal, the most powerful of which is their ability to set interest rates. When inflation is high,
Yeah.
the Fed can raise interest rates to cool down the economy and slow down price increases.
Okay.
Conversely, when inflation is low,
Yeah.
they can lower rates to stimulate economic activity.
So it's a delicate balancing act. They need to find that sweet spot where they can keep inflation under control without stifling economic growth. What are some of the indicators they're watching closely to make these decisions?
They're looking at a wide range of economic data,
Okay.
including inflation, unemployment, GDP growth, consumer spending, and business investment.
Right.
They're also paying attention to global economic conditions and geopolitical developments,
Sure.
which can have a significant impact on the U.S. economy.
It's a complex puzzle with a lot of moving pieces.
It is.
And it sounds like their decisions can have a ripple effect throughout the entire financial system.
Absolutely.
Wow.
The Fed's actions have the potential to impact everything from mortgage rates to stock prices to the value of the dollar.
Right.
That's why it's important to stay informed and understand how their decisions might affect your personal finances.
Okay, I'm definitely feeling a bit overwhelmed by all this information.
I understand.
But I also feel like I'm starting to get a better grasp on the big picture.
Good.
Well, I appreciate you guiding me through this complex landscape. Before we move on, I want to circle back to one last point about the new administration.
Okay.
We talked about their controversial appointments.
Right.
And their ambitious plans to streamline the government.
Yep.
But what about their broader economic agenda? What are their key priorities, and how might those priorities impact the markets?
That's a great question.
Yeah.
Their economic agenda is still taking shape.
Okay.
But they've signaled a focus on a few key areas. Tax cuts, deregulation, and infrastructure spending are likely to be top priorities. They've also talked about renegotiating trade deals and taking a more protectionist stance on trade.
So a mix of traditional Republican policies and some populist measures. It's hard to say how these policies will ultimately play out, but they're certainly going to have an impact on the markets.
They will. And it's going to be fascinating to watch how investors react and adjust their strategies as these policies are implemented.
Absolutely.
We're living through a pivotal moment in history, and the stakes are high. Buckle up. It's going to be an interesting ride.
I'm ready for it, but for now, I think we need to take a break and let our listeners digest all this information.
That sounds like a good plan. We've covered a lot of ground already.
We have.
And there's much more to explore.
We'll be back soon to dive deeper into the markets, explore some specific investment opportunities, and share some insights on how to navigate these turbulent times. Stay tuned. Welcome back to our deep dive into this post-election market mayhem. I'm still processing all the information we covered in the first part. So much to think about: a new administration, a volatile market, and the Fed carefully watching everything.
Yeah, it's a lot to unpack, but that's what makes this so fascinating. We're witnessing history in the making, and understanding these interconnected forces can help us make smarter decisions.
Absolutely. Now, I'm curious about how everyday investors are reacting to all this uncertainty. Are people running for the hills, or are they doubling down on their bets?
It's a mixed bag, really. Some investors are definitely spooked by the political volatility and the potential for economic turbulence. They're moving into safe haven assets like gold, even with its recent dip.
That makes sense. Gold has that reputation for holding its value during uncertain times, right? It's like the financial equivalent of comfort food.
Exactly. But on the other hand, you have investors who see opportunity in the chaos. They're looking for undervalued assets that could benefit from the new administration's policies, or they're riding the wave of momentum in markets like crypto.
So it's all about risk tolerance and timing, as always. Some people thrive on the thrill of volatility, while others prefer a more steady approach.
Precisely. And that's why it's so crucial to have a well-defined investment strategy that aligns with your personal goals and risk appetite.
Speaking of risk, we can't ignore the inflation elephant in the room. The Fed is clearly concerned about it, and they've hinted that they might slow down those rate cuts.
Yeah, they're in a tricky position. They want to support economic growth,
Right.
but they also need to keep inflation in check. Raising interest rates could slow down inflation, but also potentially trigger a recession.
It's a delicate balancing act, for sure. What are your thoughts on their chances of pulling it off? Can they thread the needle and achieve both goals?
It's certainly possible, but it won't be easy. They'll need to carefully analyze the economic data and adjust their policies accordingly. And even then, there's always an element of uncertainty. Global economic conditions, geopolitical tensions, unexpected events, all of these can throw a wrench into their plans.
So what are some key takeaways for everyday investors like me? What should we be focusing on in this environment?
First and foremost, don't panic.
Okay.
Market fluctuations are normal, and reacting emotionally can lead to poor decisions.
Right.
Stay informed,
Okay.
diversify your portfolio, and focus on your long-term goals.
Easier than done when you see your investments going up and down like a yo-yo. But I get it, long-term thinking, not short-term panic.
Absolutely. And remember, investing isn't just about chasing returns. It's about understanding your risk tolerance, aligning your investments with your values, and making decisions that support your overall financial well-being.
It's about having a holistic approach to your finances, not just focusing on the numbers.
Exactly. A solid financial plan considers your goals, your values, and your risk tolerance. It helps you weather market storms, achieve your goals, and maintain peace of mind.
That's reassuring. Makes me feel a bit more in control, even with all this uncertainty swirling around.
Uncertainty is a constant in the financial world.
True.
But by staying informed, seeking expert guidance when needed, and making informed decisions, you can navigate the complexities and achieve your financial aspirations.
Knowledge is power, as they say.
Knowledge coupled with a sound strategy and a bit of patience is the key to success in the markets. And who knows, you might even find the whole process a bit exciting. It's like a game of chess where you're constantly adapting and strategizing.
There's definitely a certain thrill to it, especially when you make a move that pays off. But speaking of moves, the new administration is making a lot of them. What are you most curious to see play out over the next year?
I'm particularly interested in seeing how Musk and Ramaswamy tackle government efficiency. It's a monumental task, but their success or failure could have significant implications for the economy and for investor confidence.
Yeah, if they can actually make a dent in that massive budget, it would be a game changer. Do you think their unconventional backgrounds, Musk from the tech world and Ramaswamy from the biotech sector, could actually be an advantage in this situation?
It's an intriguing question.
Yeah.
They're bringing a fresh perspective and a willingness to challenge the status quo. Whether that translates into tangible results remains to be seen. But their approach, whether they focus on cutting programs, streamlining processes, or leveraging technology, will be fascinating to observe. It's a real-world test of innovation and leadership on a massive scale.
Speaking of innovation, we can't ignore the rise of cryptocurrencies. Bitcoin is up over 100% year to date, and it seems like everyone's talking about it from Wall Street to Main Street.
Cryptocurrencies have definitely captured the imagination of investors worldwide. Their decentralized nature, potential for growth, and role in the evolving financial landscape make them both intriguing and controversial.
I'll admit I'm still trying to wrap my head around the whole blockchain thing, but it's clear that crypto is here to stay, at least for now. What are your thoughts on the long-term prospects for cryptocurrencies? Are they a legitimate asset class, or are they just a speculative bubble?
That's the billion-dollar question, isn't it?
It is.
There's no doubt that there's a lot of hype and speculation in the crypto market. But there's also real innovation happening, and blockchain technology has the potential to disrupt a wide range of industries. It's a space that's worth watching. But, as with any investment, it's crucial to do your research, understand the risks, and only invest what you can afford to lose.
Wise words. Now let's switch gears and talk about a company that's been around a lot longer than Bitcoin Disney. Their streaming success is a bright spot in an otherwise uncertain market. We talked earlier about their impressive content library and the value of their bundle offerings, but what are some of the challenges they're facing in this competitive landscape?
Competition is definitely heating up. There are more streaming services than ever before, all vying for subscribers' attention and wallets. To stay ahead of the curve, Disney will need to continue to invest in high-quality content, expand into new markets, and innovate on their platform and technology. They'll also need to navigate the complexities of the evolving media landscape, including issues like piracy, content licensing, and regulation.
It's a tough business, but Disney seems to have a knack for adapting and finding ways to delight their audiences. Speaking of delight, I have to mention those Skyrizi commercials again. I'm starting to think they're intentionally making them so memorable that they become part of the cultural conversation.
That wouldn't surprise me. Disney knows how to market their products and create buzz. But on a more serious note, their streaming success is a testament to their ability to leverage their iconic brand, their vast content library, and their expertise in storytelling.
They've got a formula for success that's been honed over decades. But let's shift gears again and talk about copper. We discussed earlier how China's economic slowdown is putting downward pressure on copper prices. But are there any potential bright spots on the horizon for copper? Could those green energy initiatives you mentioned actually be a game changer for the copper market?
Absolutely. The transition to a greener economy is copper-intensive solar panels, wind turbines, electric vehicles. They all require significant amounts of copper. As the demand for these technologies grows, it could create a surge in demand for copper, potentially offsetting some of the weakness caused by the slowdown in China.
So a potential battle between the forces of economic slowdown and the green energy boom.
Exactly. And the outcome of this battle will have significant implications for copper prices in the years to come. It's a trend worth watching closely, especially for investors interested in the commodities market.
Okay, so we've got Disney riding high on streaming Bitcoin, continuing its volatile journey, and copy caught in a tug-of-war between economic forces and the green energy revolution. But what about the big picture? What are your overall thoughts on the market outlook for the rest of 2025?
It's a complex picture, and there are a lot of unknowns. The global economic outlook is uncertain, geopolitical tensions are simmering, and inflation remains a concern. But there are also reasons for optimism.
Okay.
The U.S. economy is still relatively strong. Innovation continues to drive growth, and there are exciting opportunities emerging in sectors like technology, healthcare, and renewable energy.
So a mix of caution and optimism.
Exactly. The key is to stay informed, assess the risks, and focus on the long term. Don't let short-term market fluctuations distract you from your financial goals.
Sounds like solid advice, and I think we've given our listeners a lot to chew on today. But before we wrap up, I want to circle back to a topic we touched on earlier, the Fed. They're clearly playing a pivotal role in shaping the economic landscape. But what exactly does the Fed do? How do they operate, and what are some of the key levers they use to influence the economy?
The Federal Reserve, or the Fed as it's commonly known, is the central bank of the United States. Its primary responsibilities are to maintain price stability, promote full employment, and ensure the stability of the financial system. To achieve these goals, the Fed uses a variety of tools, including setting interest rates, managing the money supply, and providing oversight and regulation of financial institutions.
So they're like the conductors of the economic orchestra, trying to keep everything in harmony. But what does setting interest rates actually do? How does that impact the economy?
Interest rates are essentially the cost of borrowing money. When the Fed raises interest rates, it becomes more expensive for businesses and consumers to borrow money, which can slow down economic activity. Conversely, when the Fed lowers interest rates, borrowing becomes cheaper, which can stimulate economic growth.
So it's all about finding that balance between promoting growth and keeping inflation in check.
Exactly. It's a delicate balancing act, and the Fed's decisions can have far-reaching consequences for businesses, investors, and consumers alike.
It's like they're playing a high-stakes game of economic chess, trying to anticipate the market's next move.
In a way, they are. The Fed's actions are based on complex economic models and forecasts, but there's always an element of uncertainty and risk involved.
So what should we be watching for in terms of the Fed's future moves? What are some of the key indicators that might signal a change in their policy direction?
The Fed is constantly monitoring a wide range of economic data, including inflation, unemployment, GDP growth, and consumer spending. If they see signs that inflation is accelerating, they might raise rates to cool down the economy. Conversely, if they see signs that the economy is slowing down too much, they might lower rates to stimulate growth. They also communicate their intentions through public statements and speeches, so paying attention to their messaging can provide insights into their thinking.
It sounds like staying informed and keeping a close eye on the Fed's actions is crucial for anyone who wants to navigate the markets successfully.
Absolutely. The Fed is a powerful force in the financial world, and understanding their role and their policies is essential for making informed investment decisions.
Okay, I think we've covered a lot of ground today, but before we move on, I want to circle back to a topic we discussed earlier, the potential impact of the new administration's economic policies. We talked about their focus on tax cuts, deregulation, and infrastructure spending. But what about the potential risks associated with these policies? Are there any downsides that investors should be aware of?
That's a great question. While these policies can certainly stimulate economic growth in the short term, there are also potential risks to consider. Tax cuts can lead to higher budget deficits,
Right.
which can put upward pressure on interest rates and potentially crowd out private investment. Deregulation can lead to a weakening of environmental protections or consumer safeguards, and infrastructure spending, while necessary, can be costly and take a long time to implement effectively.
So it's important to weigh the potential benefits against the potential risks and to have a diversified portfolio that can withstand any economic shocks.
Precisely. There's no such thing as a risk-free investment. But by understanding the potential risks and rewards, you can make more informed decisions and position yourself for success in any economic environment.
Well, I'm definitely feeling more informed after this conversation, but I think we need to take another break and let our listeners process all this information.
That sounds like a good plan. We'll be back soon to explore some specific investment opportunities and share some insights on how to navigate these turbulent times.
Stay tuned. Okay, we're back for this final stretch of our deep dive into this post-election market landscape. We've covered a lot of ground, from political shakeups and the gold slump to the rise of streaming and the complexities of copper. I'm feeling a bit like I just completed a financial obstacle course.
It's definitely been a whirlwind tour of the forces shaping the markets. But that's the nature of the beast. It's dynamic, it's unpredictable, and it demands our attention.
Absolutely. And speaking of demanding attention, the Fed's actions are always a focal point. We've talked a lot about their efforts to control inflation and navigate this tricky economic environment. But what does it actually mean for everyday investors like me? What should I be doing with my portfolio in light of the Fed's moves?
That's a question on the minds of many investors. Unfortunately, there's no one-size-fits-all answer. The best course of action depends on a number of factors, including your risk tolerance, your time horizon, and your financial goals. But there are a few general principles that can help you navigate these waters.
Okay, I'm all ears. What are some of those guiding principles?
First and foremost, it's important to remember that the Fed's actions are just one piece of the puzzle. There are many other factors that can influence the markets, including economic growth, corporate earnings, geopolitical events, and even investor sentiment. So don't get too caught up in trying to predict the Fed's every move. Focus on building a diversified portfolio that can weather any storm.
Diversification, got it. Spread the risk, don't put all your eggs in one basket. But what about specific investment strategies? Are there certain asset classes that tend to perform better or worse depending on the Fed's actions?
Historically, growth stocks, which are shares of companies that are expected to grow at an above-average rate, have tended to do well when interest rates are low. That's because low borrowing costs make it easier for companies to invest and expand. On the other hand, value stocks, which are shares of companies that are considered undervalued by the market, have often performed relatively well when interest rates are rising.
So lower rates favor growth, higher rates favor value. Interesting. What about other asset classes like bonds or real estate? How do they fit into this picture?
Bonds are fixed income securities that typically pay a fixed interest rate. When interest rates rise, the value of existing bonds tends to fall because investors can get a higher yield on newly issued bonds. Conversely, when rates fall, existing bonds become more valuable.
So it's an inverse relationship between bond prices and interest rates. What about real estate? Is that considered a good hedge against inflation?
Real estate has historically been viewed as a good inflation hedge because property values tend to rise along with inflation. However, it's important to remember that real estate is also sensitive to interest rates. When rates rise, mortgage rates also rise, making it more expensive to finance a property, which can cool down demand.
So even with real estate, there are complexities to consider. It seems like every asset class has its own unique set of risks and rewards.
That's right. There's no one-size-fits-all solution. It's all about understanding the dynamics of each asset class, assessing your own risk tolerance, and building a portfolio that aligns with your financial goals.
Okay, I'm starting to feel like I need a PhD in economics to navigate all this, but I appreciate you breaking it down for me. It's definitely helping me to see the bigger picture and make more informed decisions.
I'm glad to hear that the world of finance can seem intimidating at times, but it's really about understanding the fundamentals and applying them to your own situation.
And speaking of fundamentals, we've talked a lot about the U.S. economy, but what about the global economic outlook? Are there any international trends or events that could impact the markets here at home?
The global economy is increasingly interconnected, so what happens in other parts of the world can certainly have an impact on the U.S. markets. Right now, there are a few key areas to watch.
Okay, give me the global rundown. What's on your radar?
First, there's the ongoing war in Ukraine. This conflict has already had a significant impact on energy prices, global supply chains, and geopolitical stability. It's a situation that continues to evolve, and it's important to stay informed about the potential implications for the markets.
Definitely a source of uncertainty and volatility. What else?
Another key area to watch is China's economic slowdown. China is the world's second largest economy, and its growth has been a major driver of global economic growth for decades. But China's economy is facing a number of challenges, including rising debt levels, a shrinking workforce, and slowing productivity growth.
So their slowdown could ripple through the global economy, impacting everything from commodity prices to corporate earnings.
Exactly, and it's something that investors need to be aware of. Finally, we're also seeing rising inflation in many parts of the world. This is partly due to supply chain disruptions and increased energy costs, but it's also a result of loose monetary policy in some countries.
So a confluence of factors contributing to this global inflation surge.
Right, and this is putting pressure on central banks around the world to raise interest rates, which could slow down global economic growth.
It sounds like a pretty precarious situation. A lot of potential pitfalls out there.
There are definitely challenges, but there are also opportunities. The key is to be aware of the risks, stay informed, and make smart decisions.
Sound advice. Well, I think we've covered just about everything in this deep dive. We've explored the political landscape, dissected the economic outlook, and even ventured into the realm of cryptocurrencies and streaming wars. I feel like I've learned a lot, but I also realize that there's always more to learn.
That's the beauty of the financial world. It's constantly evolving, constantly challenging us to learn and adapt. And that's what makes it so fascinating.
Absolutely. So as we wrap up this deep dive, what's the one key takeaway you'd like our listeners to remember?
The world is full of complexity and uncertainty, but it's also full of opportunity. By staying informed, being proactive, and making sound decisions, you can navigate the challenges and achieve your financial goals.
Well said. And I want to add one final thought. Don't be afraid to ask questions. Seek out expert guidance when needed. And remember, investing is a journey, not a destination. It's about making smart choices today that will set you up for a brighter financial future.
I couldn't agree more.
Well, to our listeners, thank you for joining us on this deep dive. We hope you found it insightful and informative. Until next time, stay curious, stay informed, and stay ahead of the curve.